Welcome back to the Dividend Diplomat YouTube channel. You got your boys here, Lanny, Bert, the Dividend Diplomats. Guys, today we're going to talk to you about two undervalued dividend aristocrats that are on sale right now. They are so much on sale that they are moving so high up my watch list, I may just be buying them this coming week. So stay tuned, buckle up, and see what stocks we are buying today.
Let's go, guys. Hit that subscribe button. Give this video a nice thumbs up. Community, you're already here, so just do us a favor. We're trying to get to 20,000 by the year's end. We're getting closer to 18,000, guys. So let's light this video on fire. So hit that subscribe button. It takes 2 seconds. We appreciate it. That thumbs up. Let's get this video to go viral, baby.
Yeah, you know what we haven't done while I have my mustache that seems appropriate for this? Do it. Do it.
Oh, do it,
Do
do
it.
it.
Do
Oh,
it.
man.
Yeah. All right. So we got to do that while I still have this thing because it's not lasting much longer. All right. So let's talk. What's going on in the market? The market cannot find its footing. Interest rates continue to climb. They continue to get higher and higher. Short-term rates, the long-term rates, everything continues to go up as the Fed continues to send out those warning signs that they aren't dropping interest rates anytime soon, well into 2024 and what, maybe even 2025 at this rate might be before rates start coming down. That obviously was not the news the market was hoping for. And as a result, we saw some prices in the market and some great stocks start to trickle down at the end of the previous week.
Yeah, guys. I mean, the S&P 500 obviously finished off during the month of September. If I do a quick little stat, down 209 points
Ooh.
during September, which is almost 5%. I know a lot of feedback was it felt like there was a lot more downward movement in the market. Hey, over 200 points is quite a bit, but yeah, I mean only less than 5% there. So but we'll take it. That means
Yeah,
new opportunities, like Bert had said, is coming out of the woodwork, coming out
yeah,
of the ground. They're growing some grass. We're starting to see some good opportunities here, some great dividend aristocrat opportunities. And again, Dividend Aristocrat is a company that's increased their dividend for 25 plus years. So if you're in the stock market right now, looking for those dividend growth stocks that have been through hell and high water, good times and bad times. Dividend aristocrats, as Bert knows, and Bert's probably was going to talk about anyways, dividend aristocrats are great stocks to add to your stock portfolio.
yep. And we want to build those high quality stock positions when the times are tough. This is what they are made for, and this is the great time to start picking at them. And these two stocks in particular, they're in my wife's portfolio, so I'm focusing on that niche portfolio. One of the positions we started building at the end of 2022 and into early 2023, and then we stopped. And the other one we've just been adding to also throughout most of 2022 and 2023. Both of these companies are new, but we are very pumped up to grow the positions. So, Lanny, let's just jump right in. This first company is Medtronic, ticker symbol MDT. When we were buying them, they were in the high 70s, low 80s. Stock price shot up. It even, I think, hit the 90s at one point for Medtronic. So we paused our purchases. We slowed it down a little bit. What's happened over the last month? It's back down below $80 per share. It's currently at 78.36 to finish out the month of September. So that's why Medtronic is popping right back up on our stock watch list here.
Yeah, the big news there is the Carlyle Group is going to be buying a major stake within their units for patient monitoring and respiratory intervention units. Medtronic's going to still own a percent of that revenue arm. So that was a big news right there. But similarly, leveraging debt to grow the business, obviously higher interest rates for longer, never does the financial statements and cash flow well. So MDT similarly came down with the market. The funnier part is that they're flat year to date. So they're actually not down yet this year, but they are down comparatively going back to October slash September of last year.
So let's run them through our stock screener, which has three metrics, including price to earnings ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends. And then after that, we look at the dividend yield. So let's jump right in here with Medtronic. As I said, the price was 78.36 when we're looking at that price to earnings ratio. forward EPS are $5.47. That's a PE ratio of 14.33, well below the current S&P 500, which continues to remain in the 20x plus range.
Yeah, not too bad. Obviously, love seeing that price to earnings multiple, but let's really get into more of these dividend now pure metrics. The payout ratio, paying $2.76 annually per year, obviously spread over 4 quarters. That's a flat, solid smack dead in that perfect dividend payout ratio range of 50%.
Perfect. Doesn't get any better than that. Their 5-year dividend growth rate is 7.37%. They've increased that dividend for 45 consecutive years. So they are half a decade away from becoming a dividend king. Put that crown on here within the next decade before 2030.
That BK crown.
Yep. But there is one caveat. Terrible dividend growth in 2023. Like so many companies out there, their increase was 1.5%, well below their average. So it's important to note that they slowed it down there, just like so many of those other great stocks. It's a common
Yeah.
theme we've seen.
And unfortunately, you kind of see that probably going forward, guys. At least 2024, you might see a rebound in 2025, but who are we? We're just making an estimated guess based on, current results as well as forecasting what 2024 looks like. But yeah, going into the dividend yield, though, they are now 2 times above the S&P 500's dividend yield at 3.5%, 3.52 to be specific.
Yeah. And I had to like triple check this because it didn't seem right. But according to Y charts, their 5-year average yield is 2.27% for Medtronic. So someone please let me know if that's not right. We're not going to heavily rely on that one because it is such a large disparity, but something's going on here with Medtronic where their yield is much higher than some of their historical marks.
Yeah, guys. So there you have it. 14 PE, 50% dividend payout ratio, 7.5% dividend growth rate, or just about. Obviously, expecting lower dividend growth in the near term. 3.5% dividend yield, flat year to date. But guys, remember, Bert has two. This is a 2 stock dividend stock watch list heading into the month of October here for him and his wife, specifically his wife's account. And remember, we were teasing that this is 2 dividend aristocrats, brother. So, Bert, the hurt, what is this next dividend stock?
Rowe Price, ticker symbol TROW. Tweet about this one. We've talked about this company for a long time. It's a very great, large asset manager. They have over
a long time coming, brother.
It has over $1.4 trillion in assets under management. It is a very, very large fund. The beauty is they have no debt on their balance sheet and they've continued to come down lately. So year to date, they're down 4% over the last year, down 3.5%. So they're continuing to tread water. They're not down a lot, not up a lot. They're just kind of hanging in there a little bit below their previous year's mark. So T. Rowe Price popping up once again on our dividend stock watch list.
Popping up, guys. Obviously, as the market goes down, as Bert said, this price will come down with it. If the market stays down, the price will probably stay down as well, guys. But let's get into the metrics of T. Rowe. Again, my old sad story was my first investment platform was T. Rowe Price. So I do own T. Rowe as well, and I still kind of own the same type of investment that I initially started with from February of 2009. So this one hits home, brother.
Love
But
it.
trading at $104.87, down 4% this year, down 3.5% since end of September, early October last year. Expectations are $7.56. That leads to a pretty low price to earnings ratio of 13.87B.
Beautiful. Their annual dividend's $4.88. That gives them a payout ratio of 64.5%.
Ooh.
Just a hair above the 60%, but overall not too concerning. But it is something to keep an eye on over the next several months and years for T. Rowe.
Interesting. Been growing dividends though for 36 plus years. Average increase right now is still showing over 12.7%, but that last increase was only 1.7%, similar to Medtronic. Really nudging it right now simply because, hey, we all know how the stock market performed back in 2022, a down year. And guys, though the S&P 500 is still up this year, we'll have to see how the market finishes over the last 90 days of 2023.
It's gonna be a screamer. All right, so their yield at the
Oh, wait,
moment.
there's more.
That's right. Their yield is 4.65% and is well above their 5-year average of 2.87%. So that's partially why so many people jump on T Rowe right now. 4.65% yield, almost at 5%. That's insane right there for T Rowe price.
Guys, T Rowe Price almost yielding, yeah, 5%. Again, a 14 PE, 65% payout ratio, 36 years of growing dividends. So that's two dividend aristocrats, guys. So let's get to it. Let's get to the Brad's ass. Let's get to the ring. Who is the king of the ring right now here for you, Bert, as you're focusing on your
I don't,
wife's account?
I don't see why I wouldn't add to either of them. So Medtronic, she owns 32.66 shares. T Rowe, she has 28.886 shares. Zero reason why I can't just scoop up a couple shares here and there, each one of them. A great time to keep building that position, keep lowering that cost basis, and keep growing that dividend income, because that's what it's all about.
Guys, so Bert is buying these two dividend aristocrats right now. I'm going to keep my eye on Medtronic. Similar to you, Bert, I was building that up. Gosh, you remember that back at my wife's account as well. So it's funny that they're both in our wives' accounts. Hold 56 plus shares right now. So yeah, obviously, have room to get to that illustrious 100 share threshold. I'll be watching Medtronic. I kind of want to see them closer to 4% yield personally. So I'm going to wait a little bit, not buying any of these. But Bert is saying he's probably going to acquire some shares of two aristocrat stocks for his wife's account.
Let us know what you think of these companies. Let us know what you think of Medtronic and T Rowe Price. If not, what other stocks are you buying if you're not grabbing these two? If you haven't already, subscribe to this channel. Give this video a thumbs up. And remember, if you're not with us, you're against us, Jack.
Guys, that was Bert and Lanny from the Dividend Diplomats, over and out.